Hello and welcome to this week's live webinar where we look at ASX investment opportunities in review for the 29th of June. Any individual reading or listening should discuss with their financial planner or advisor the merits of any recommendation or offer presented in this material for their own specific circumstances and realise that not all investments are appropriate for every individual. Investor Signals provides a broking account service where we work in partnership with you. We offer a series of model portfolios based around our ASX 20, 50 and 100 as well as the US S&P 100. We operate an ASX and US high conviction. We pick up the themes expressed in the recordings and on the blog. We also have an independent portfolio and we can utilise derivatives to enhance your portfolio returns. If you're interested in discussing further about the Investor Signals broking account, please contact me 1300 614 002. Up on screen is the performance of the model portfolios. Over the last 5 years, they've averaged roughly 13% return. And part of tonight's presentation we'll have a look at the stocks that are currently in the models. If you'd like to know more about the brokerage account service, please visit the Investor Signals homepage, or if you'd like to take a free trial of the technology I'm presenting tonight, you can do that by clicking on research and the free trial option. The technology or the Investor Signals membership is $1,320 for the year. And as I mentioned, you can get the free trial by visiting the website or calling the office. Tonight we're going to start with a look at the Nasdaq, and we've mentioned, or it's been a focus of the recordings over the last number of weeks, is essentially waiting to see the momentum break in the Nasdaq and determining whether that's the beginning of further selling pressure building. We're certainly getting much closer to US earnings. We're probably less than 10 trading days away from the US banks starting to deliver their results. And one of the points to consider, I think, is Nike's results, which were out last Thursday, which showed a 38% fall in revenue. They had significant growth in their online sales, but as a relative size of their online sales versus brick and mortar, it wasn't enough to make up for that overall decline. So I think that kind of gives us a bit of a read through as to what we can expect as we start to see these US results come through. And it hasn't changed my view that it's going to be a period where the resolve of the optimist is tested, and the risks are increasing to the downside for the market as we come into these results. So one approach, because you never know, is the selling a few days or does it develop into something far more material? And for that reason, what we use as a bit of a reference is just to say, well, let's keep an eye on this as it trades below that 10-day moving average, and you want to have some protection in place on your portfolios, or even outright looking to profit from a downside move in the market whilst the index trades below that average. So keep an eye on the blog and the future weekly recordings, because a focal point will be this shift in momentum in the US market, and is it going to feed through to a lower valuations as a result of lower earnings in 2020. On that note, let's go into the top 100, look at what stocks are under buy conditions and are worthy of being in the portfolio. We'll identify which ones are under sell conditions, and at the same time try to highlight the names that you want to start thinking about for a month or two down the track that you want to start looking at adding to your portfolios. So JB Hi-Fi, it's just not a stock that we've drawn to from a fundamental valuation standpoint. The stock is in the model portfolio. If we look at the history of it, it's shifted from sell conditions to buy conditions there at around $21. So it's doubled in value since it's been added to the model portfolio. But it's not a stock that I'm active in at the moment, but again is in the model portfolio. Saracen Minerals, I like this. Exposure to gold makes sense. Our preference at the moment is Newcrest and Gold Road Resources, or possibly even Northern Star now, Newcrest and Northern Star. So we've traded some of the gold exposure, so we've been in and out of Gold Road Resources, same with Saracen, but we've maintained our position in Newcrest. But as I'd spoken about last week, Saracen's seen record cash savings effectively, or retained profits being built up on the balance sheet at the moment, and I think you'll start to see good results come through from Newcrest on the production side. So Saracen, under algorithm buy conditions, making higher highs, higher lows, comfortable with gold coming into US earnings at the moment. Ansell, little expensive, but made the switch from sell conditions to buy conditions, and it is in the top 100 model portfolio. Newcrest, so we continue to like this. Our target was looking for maybe up around $33 to $35. Newcrest could have some more positive production numbers out in the second half of this year. So if gold holds up near these levels and we get better production numbers, Newcrest could be strong into the back half of this year. Not looking that far down the track and just saying what about over the next 4 weeks? Well, volatility picks up going into US earnings in 10 days time, Newcrest should, or gold in general, should do well. So along that theme, Northern Star at around this 13.20, I think that's a buying opportunity now, and I posted that on the blog today, as I did with Brambles. So we only have out of 20 stocks in the ASX Top 20 Index, only 4 companies are in the model portfolio at the moment, and the most recent addition to the portfolio is Brambles. You may recall back here at around $12, I was highlighting that the stock was a little expensive. We're looking for a target there of around $10.50. It is one of the first group of companies from the top 20, or top 50 companies even for that matter, that we've seen shift to buy conditions. At around $10.50, I'm comfortable with Brambles. I don't think the upside in it is substantial over the next 6 months. So owning it and selling covered calls, you're getting about 10% cash flow, but comfortable. Given that Brambles only provided an earnings guidance a month or two ago and reaffirmed that they were expecting 5 to 6% earnings growth, even if they missed that and came in sort of 1 or 2% growth, the market would be satisfied with that, and I think around that 10.50 probably factors in a slightly lower earnings growth rate. TPG, we like this. We just want to revisit it at lower levels. It was a stock that we bought at around this $7 support level. At around $9 we've taken profit. It'd be nice to see it pull back to around $8 and then re-enter TPG. Next DC is a new addition to the S&P 100 index. It's under algorithm buy conditions. If we look at the history of it, it switched from sell conditions back in 2015 to buy conditions, and if we track sort of the pattern of the stock, has continued to make higher highs and higher lows, bullish momentum. The most recent buy signal here was around 650, and we'll keep an eye out for the next pullback and the algorithm buy signal there, and I'll update you on the blog. Sonic Healthcare, we like this name. This is one that you want to make a note of and buy on the dip. So in the coming months, if we see a correction back down below sort of this $26 level, we'd expect to see another algorithm buy signal and see that added into portfolios. Likewise with Afterpay, looking for a pullback in the coming months, maybe back to around $40, and then consider that. ResMed, the history here, it's gone from sell conditions in 2016 into buy conditions at around $14, remains under algorithm buy conditions. The most recent higher low there at around $23. At around $27 or $26 we've taken profit on ResMed. We like the growth story here, but it is getting a little expensive, trading on less than 1% yield. So it's just that difference between sort of the trading commentary that's provided on the blog opposed to the algorithm portfolio, which tends to have a lot longer term outlook. So in the case of the model portfolio, ResMed's still in there. Ramsay Healthcare, it's at around this $60 to $65. I think this is one that you want to make a note of, buying that on the dip. Not too much in the way of growth, but it is a defensive stock that money will gravitate back towards, especially if volatility picks up a little bit in the broader market. ASX, history here, it switched from sell conditions back in 2016 to buy conditions, and it's been on a strong uptrend since. It has consolidated for the last 12 months, and we see more of that happening. Any pullback back below $80, comfortable buying ASX. CSL, been under buy conditions. It's the longest held stock in our model portfolio. Switched from sell conditions to buy conditions back in 2015, and we've continued to see the buy signals since then. We're looking for the stock to consolidate, move sideways around this 280, 290 level. We do see that it's got potential to trade back up through $300. There are some risks, as with most companies, coming into the upcoming reporting, but we think that that would be a buying opportunity, any weakness around the August announcement. But at the moment, we're comfortable buying CSL. Westpac not doing there at the moment, still cautious on the banks, and I'll talk a little bit further about that in the context of the US banks. AusNet Services, so this is an electricity company owned by Singapore Group. Around this, so it's corrected from $2 down to $1.69, $1.70. We think that that's going to find support there, and we should get a rally, not necessarily looking for a rally up to take out the prior high, but looking for a bounce from, say, 170 back up to maybe that 180 level. QBE Insurance not doing there at the moment, still cautious on the insurance companies. Orica, so back down, this is one that you can add to your watch list. The momentum indicator hasn't yet turned positive, but just keep an eye on that. There's a short-term trade coming up as that rally. So generally the resources area of the market's holding up well, and we expect that to feed through to an okay outlook for Orica. Sydney Airports, difficult to buy this in the face of ongoing increases in COVID-19 cases and travel restrictions that exist. But there's a point where the market will be looking sort of 12 months down the track, and I suspect that maybe this sell-off over this period, and that may be something that extends over the next few weeks, but it's worth just keeping an eye on Sydney Airports, and maybe as a way of sort of ensuring that we don't jump in too early here, you could watch the price action below this average and look for it to cross back above it for a positive entry sign. NIB Holdings, cautious on the health insurers, and we'll see that reflected in Medibank when we get to that. Iron ore prices are holding up well, so Fortescue's still under buy conditions, whereas BHP Rio's not. Santos, I think around this $4.70 to $5 is a good entry opportunity into Santos. Not expecting it to do too much over the next 3 or 4 weeks because of that likely weakness in the US equity market, but we do think sort of this dip is probably a buying opportunity there in Santos, as is the case in Alumina. We think the dip's a buying opportunity. APA went ex-dividend today. We like this stock delivering 6% earnings, 4% dividend yield. If the selling continued over the next few days and it traded sort of between that $10.50 and $11, comfortable adding that to portfolio. Not doing there in Dexus, not doing it in Flight Centre. Beach, preference is Santos over Beach. Evolution, so within the gold stocks again, just reiterating Northern Star and Newcrest as our preference, but Evolution's rallied sort of from that $5, but it is under sell conditions at the moment, which is what's sort of been leading us towards having the exposure to Newcrest and Northern Star. So now we're into stocks that are under sell conditions. Some of these I'll skip through, others I'll pause and spend a little bit of time on the trends. So Tabcorp, cautious here and mindful that around this sort of 370 probably ends up resistance and the stock struggles below that. Coles we actually quite like, so not too aggressive on the sell side there, nor in AZJ. Vicinity not doing there at the moment. Telstra, keep an eye on this. It is under sell conditions, making lower low, lower highs, but around $3 we think that starts to offer good value there. Woolworths mainly tracking sideways, so maybe it consolidates within the band of say $34 to $37. There is some risks around the impact from pubs and clubs to Woolworths earnings, but the growth in the grocery side of the business, we're pretty comfortable that Woolworths mainly tracks sideways and then ultimately probably recommences an uptrend. Wesfarmers a bit cautious here still, so up at around this 43, 44 starts to look full value. Cochlear not doing there at the moment. Car sales, so all the technology basket, we're a bit worried that the break below that average in the Nasdaq and the valuations that you're seeing across car sales, REA, are looking a little stretched, and these are businesses we want to buy but at lower levels, so we'll wait and see if over the next couple of months a sell-off presents in these names. So REA's pulled back a little from that 112 back to 104. So Seek, again, within that technology basket, we like the growth potential here, but do think that sort of the current price captures that, and in that backdrop we're a bit cautious on what's happening now in the Nasdaq. It gets pretty difficult to want to own some of these the domestic technology names at the moment. Coca-Cola not doing there at the moment. Cleanaway, we really like the story here on a sort of 2-3 year outlook, and this is one that we'd be looking to buy on the dip. So we do think that it's capturing the upside where it is at the moment price wise, and we're looking for a pullback maybe back to around that 190 level to re-enter Cleanaway. CBA cautious here, and I'll finish tonight with a look at a couple of the US stocks just to give you an idea of what we want to watch out for there. Nine Entertainment, so it's rolled over under that recent algorithm sell signal. South32, there's speculation that Fortescue should make a takeover bid for South32. That's just a Citigroup analyst's opinion, so I don't necessarily think it's the view of the board of Fortescue. But South32 has corrected a long way. When we look at it, it's come from $4.25 down to $2. Still at the moment making lower low and lower high. So over the coming months, if we start to see that break higher, it might be an uptrend that we want to try to get on board. ANZ Bank, under sell conditions. So James Hardie, under sell conditions there, and it's rolled over. Computershare. There was a research article put out today by one of the investment banks that upgraded Computershare to an overweight. We'd like to see more confirmation in the August earnings numbers, but for the moment we're of the view that it's up near resistance at around that $14 level there. Bendigo under sell conditions. NAB under sell conditions. Goodman Group, we like this within the property trust, but expensive, only just over a 2% dividend yield at the moment. BlueScope Steel, so under sell conditions there, it's below the average. So between 70 to 80% of the market roughly at the moment is under sell conditions, which is one of the highest allocations that I've seen since we've been following the algorithm model. Rio under sell conditions at the moment as well. Centre Group under sell conditions, Downer EDI under sell conditions, BHP under sell, as is AMP. Medibank, so resistance there at around $3.10, and at the moment it's trading below that. Oz Minerals, really like the outlook here for Oz Minerals, but short term we think that around this $11 level starts to act as resistance and it moves lower. Altium, so we've been on the short side of that, it's moving lower. GPT not really attracted to Office Trust story right at the moment. Cube Holdings up against resistance. CIMIC Group, so the share price has been fairly soft in CIMIC over the last few weeks. Keep an eye on the shorter term momentum indicator. This is an interesting one just to see where the longer term fundamentals win out here, given that CIMIC's sort of in that right space with exposure to infrastructure spending. But what may be a concern is if there's an increase in bad debts with CIMIC, albeit they, as I've highlighted, they've cleared up their balance sheet in regards to the exposure in the Middle East. Lendlease, good long-term story here, but the shorter-term fundamentals probably don't support a rally in Lendlease at the moment. Macquarie, so under resistance, it's broken below the average, and let's have a look tonight at, say, Goldman Sachs and Citigroup as two global banks, just to see what the comparison in the price patterns there. But Macquarie at assuming around that 120 acts as resistance. AGL under sell conditions moving lower. ALS under sell conditions moving lower. Incitec, keep an eye on this. This would be a counter trend trade, but watch this momentum indicators here. I'll update you on the blog. We get a bit of comfort from Incitec shoring up their balance sheet with the recent capital raising. Woodside Petroleum, so preference still Santos, but Woodside on the radar, but is under sell conditions. Insurance Australia Group under sell conditions. Amcor, so this is one that you want to make a note of and just keep an eye on if over the next month or two, if we do get weakness throughout US earnings season and it weighs on Amcor, I'd be a buyer of Amcor on upcoming weakness. Iluka, not doing there at the moment. Aristocrat. The resistance for Aristocrat was there at around $28. It's now trading $24.80, so it's already had a reasonable correction just over the last week, but it is still below the average and under sell conditions, so it's not a stock we're too active in. We're being cautious on the local casino. Resort plays, both Crown and Star. I think the market got a little bit ahead of itself with that recovery rally. Boral up at around $4 we think's under resistance. Oil Search not doing there at the moment. Treasury Wine under sell conditions and moving lower. Link Admin under sell. Suncorp under sell. Bank of Queensland under sell conditions. Star. So we had put options in Star, which we've closed out today. But we think in percentage terms it's already correcting from $3.50 down to $2.70. But the outlook's still challenging for both Crown and Star. Challenger not doing there at the moment. Mirvac Group under sell conditions. Reliance Worldwide under sell conditions. Origin, we like the longer term fundamentals, and this is another one where if we can pick it up a little bit cheaper, we're happy to have a think about adding that back into portfolios, even though it is under algorithm sell conditions. Charter Hall not doing there at the moment. Magellan just flagged at around that $60, and obviously if the US equity market does struggle below those recent highs, Magellan's not likely to go on with it. Worley's cautious there with Worley's, as is the case with Qantas. Transurban, so this is one that I'd highlighted that had little reason to really charge on above that $15 price point. So we've seen the stock go ex-dividend today, and the dividend was only 16 cents, so almost half of what it was intended to be or what investors thought a few months back. Transurban is a stock that you want to take advantage of the sell-off though, so we'll see where this settles over the coming weeks and review Transurban on the blog as a buy opportunity. Stockland's under sell and a bit cautious there at the moment, as is the case with WiseTech, so it's under sell conditions, it's trading below the average. Aurora had an earnings miss and back to Virgin. So the takeaway from this evening is, we've had a pretty critical change in sentiment, I think, in the US. So we seem to be more in this risk-off phase that's starting to build. We're seeing that reflected in the Nasdaq having a heavy sell-off, a bounce back followed by another heavy lot of selling on Friday. We are seeing some weakness in futures tonight, but the risk for the market seems as elevated as I can recall it at the moment. So I do think investors, need to have some high level of cash exposure, and maybe on the protection on the short side of the market, think of the inverse ETFs, such as Bear, which is if the market goes down 1%, that goes up 1%. BBOS, which is the double inverse, so if the ASX goes down 1%, this will go up 2%. The equivalent of the BBOS in the US is the BBUS. So again, if the S&P goes down 1%, this will go up 2%. We're still in an environment where you want to think about gold. So now whether you're doing that through Newcrest, Gold Roads, or an ETF like GDX, and as I mentioned earlier in the recording, there was a couple of names that we're comfortable sort of buying. So to finish with tonight, let's just have a quick look at a couple of these US stocks that help sort of provide a bit of backdrop to sectors. So Goldman Sachs, you can see here that it's rallied back, it's under sell conditions, and now it's trading below the average. And I think that's reflective of sort of some of the pressures that are likely to build in these bank names, especially as we see the first round of announcements come through in a few weeks. So this is Citigroup. If we have a look here on Citi, so it's pulled back from 62 down to 50, rallied back towards that 55, and then it's sort of trending lower again there at the moment. If we have a look at what happened to Nike following its earnings result, so we can see there it's under sell conditions, and we can see following the fall in revenue, you can see Nike there's backed off as well. So on the buy side at the moment, if you come into the watch list, have a look at the recent blog posts, and you can get these in. So these are the names we're focused on: AusNet Services, Illumina. Bega, just keep an eye on that. Probably want to see that trade a little bit lower. Brambles comfortable at the moment. CSL okay at the moment. Newcrest, I think you still want exposure to gold, so whether that's through Newcrest or Northern Star. Orica looks okay. ResMed we like, but getting a bit expensive at the moment. Saracen,